The broadcast is now starting. All attendees are in listen-only mode.
TGIF, everyone. Hope everyone had a good week. Been lots of great ideas. Hello, Craig. Lots of great ideas in Face for free. Even more great ideas as a subscriber, not for free, but paid for many times over. Hello, Spencer, Pete. And why does that happen? It's the people. What a crew. What a crew. Find that much talent on one team. Might have to go back to the days when R.N. Elliott and Jesse Livermore and W.D. Gann got together for a beer. Hi, Ziggy. How are you? So let's see what's going on the dashboard because I'm through driving my car this week, but I'm getting ready for next week already. This is one of the ways I get ready. And I think this is one of the ways that everyone who trades, not just FX, needs to get ready. You get roadmaps from award-winning analyst Greg Horvat. I don't know how many trophies he's won from FX Street. Get harmonics from Andre, who's a much better tactician than Chef. Ever hear of Blake Morrow? Trades for one of the biggest funds out there. Started off as a moderator at Wise Trade. He started off before that. I think Blake's breakthrough was during the dot-com era. It was along the board, got out in time. Nice start. Steve Volge, Mr. Discipline. You can learn a lot about candlesticks and many other things from Steve. And Steve, to serve the FX community at large, does a complete roundup of the market almost every morning. He won't be here today, but Grega will be with us. I've been around a little while, and I've never seen anyone do a run through the board and do it better and tie it together. And here's Mr. Fundy, Stelios. Has a great understanding of fundamentals, not a bad technician. He says he's not a technician, but that's just his humility. Gives us a rundown on what's happening all the time, every day. Hangs out in the chat room with Blake, Steve, and the other 100 or so professional traders, along with people that are learning. And I teach surround yourself. Yeah, I heard surround yourself with traders that are better than you. And that's how you learn. And Ziggy here, okay. You've known me for how many years? Goes back to FX Street, right, buddy? So you've been listening to me talk about the market for a long time. And before FX Street, I'd been doing this for a few decades. So let me ask you, you hear me now every day, you're here, you're loyal. Okay. Can you tell the difference between my looks and views on markets the last couple years compared to prior at FX Street? You see any difference? Anyone else who used to be with me in LAR? I'm not saying I didn't, find, back then I used to say I'm just a blind squirrel in the middle of a snow-covered forest, wearing my shades, looking for a few nuts. Okay, here's Ziggy's statement. Yes, I would listen to you and Blake. You've got better. Okay, I agree. I have gotten better, and the reason is I'm here every day and not just during face, but I can, yeah, nothing wrong with getting better. You know what? Everyone, no matter where you're at, you're either growing or you're dying, right? So here's your homework assignment. Okay, I wouldn't even forget the trial. You know what? Face is a trial. Okay, so um, I would consider at least get them all. Okay, 119 per month, 11 pips in euro, 12 cents. In fact, who was short crude this week that's in the house? Anyone? It made my April this last week. Okay, Alina, are you a member of ForexAnalytix? Okay, so a lot of people caught it. Okay, um, let me ask you this. Was it because of our analysis that you did it, or it was a completely original idea on your own? Okay, so your Pete's original. Oh, it was your idea? Okay. So here I have a great question for both of you guys. Since um the analysis and I know I've been talking about crude all week. In fact, let's look at it. So it was a turnaround Tuesday idea and I was early at 580, but I had enough breathing room to survive this even though and when it did that it did not confirm. And then I talked about that your first signal that something was wrong with crude was going to be back under this area of 5.5. And then I said I believe that the next level will be testing the breakout, which a lot of people called this a breakout. Now we have what's one of Blake's favorite trades, failed breakouts. And Blake was talking about the long side of Canada because of the action in crude. In fact, USD CAD wasn't going down while crude was doing this. And maybe it was a foreshadowing. And now here we are at the wedge line. So I'm not going to tell you what to do. So I want to ask you, Alina and Pete, um, if you have your own ideas that are effective, like your short crude, why do you come to face? You're lonely? That's it, Alina? You're lonely? Try Match.com and use a recent picture. Okay. A lot of people, I remember when I was a bachelor a long time ago, people would use their high school. You have a dog? Okay, you're better off. I agree. How about you, Pete? Why do you come to Face? It gives me other angles and views, adds to my confidence too, if your views agree. Okay, so it serves you. Alina doesn't need it, but it serves you. So do you know how you say thank you for this? Okay, are you going to do it? No, not a trial. If anyone does something nice for you, do you give them $1, Alina? Okay. All right. So anyway, back to the markets. So thank you, Nick. Hmm. Oh, thank you, Craig. Craig says, I come here as I pay for a subscription, and this is the gold for me every day. Beautiful. Okay, just wanted to clarify a few things. You know, some people like to drive on one-way streets, and if you drive on one-way streets, sometimes if you're driving the wrong way, that's all I can say. So, Blake, looks like the Iranian news, people who bought that headline are selling newspapers today.
Yeah, I mean, crude's a little weaker, obviously, on the day. I don't like. Well, first of all, I don't like trading crude. I can probably count on my hands the number of times I've actually traded crude oil. So, it's one of those that I just it's an asset class that doesn't sit well with me. It's kind of like eating pizza and drinking beer at my age. Doesn't really sit well with me if I do too much of that at the same time. So
Oh,
that's how I feel about crude. But crude's, yeah, I mean,
you
we're
could
we're a tech port
take
here
a
on
Prevacid.
I just need I need an Alka Seltzer, you know, a Tums, something.
I,
But
how
anyway,
come? How come when we were 20 we could eat any food combination and it was?
I don't
Huh?
know.
What
I don't know,
happened?
but
I'll
I
tell you
missed
what
it.
happened, Blake. 20 years of trading.
Yeah, maybe that's it. Hey, I want to make
Go
I
ahead.
want to make a little, a couple of comments. First of all, man, it's Friday, and you sound tired today. I'm tired today. You sound tired today. You sound
I
like you're
have
a little grumpy.
dental issues,
All right. Well, then I'll
and
gladly take over from here.
and
But
it does tire you out when you're in pain, any kind of
yeah,
pain, it tires
right.
you out.
And another comment, I don't trade for one of the biggest funds out there. Actually, I trade for a
Oh,
very boutique firm, and
oh.
it's a
I
closed
think
down.
I said best.
Oh, best. Okay, I thought you said biggest, but
Oh,
anyway, I trade for a small boutique firm, and we're handpicked, and there's just a few of us, and there's a few like 8 of us, and we rock it out. I mean, we do well, but it's closed end, so it's not it's just with our investors that are the principals of the firm. So uh, but 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 thank you. I thought you said one of the biggest. I'm like, oh no no no, not at all. No, we're just a small shop, but we do some good business.
elite
But
reputation
it's
everywhere on
a
the street.
it is a great reputation, the firm, and pretty elite group. So I'm very proud to be associated with who I'm associated with. Just great guys, all the way around. So um, we're going into Friday, and I know for me it's been a good week, and actually you know, uh, I think for the majority of our traders in our core group of the Forex analytics community, I think everybody's done pretty well. We caught this dollar bullish move. The dollar doesn't look like it wants to stop just yet. So hold on, let me turn down my office really quick. Turn down the speakers just a hair because they're blaring into the speakers because they're just kind of joking around ahead of the GDP numbers because we already kind of hashed out the stuff. Anyway, GDP numbers are coming out here in the next 15 minutes. Bloomberg's looking for, let's see, Bloomberg, you can see right here, Bloomberg for quarterly GDP looking for 2.3%. Right here, annualized GDP at 2.3%. I think it's a little on the high end for Bloomberg right now. And if you look, just like here's Forex Factory advanced GDP at 2.2%. This is trading economics. It comes in at 2%, wherever it's at. Oh, there it is. At 2%. Previous was 2.2%, but their consensus at 2%. If you look at investing.com, they're coming in at 2% as well. So 2.3 might be a little lofty, and so we got to be a little careful. Also, so let me just stop by saying if the number comes in around 2%, might see a little bit of dollar selling. We do have from a couple different banks, I've read that there is dollar selling going into month end. So if you look at today is the 26th, month end flows are probably going to be hitting Monday, Tuesday. It says that they're from what I've read, it's supposed to be some dollar selling. So what does that mean? Well, if you look at the euro dollar, oops, I didn't mean to do that. If you're looking at the euro dollar, I covered my short like literally right here yesterday. So you can see we're not doing a whole lot of anything. We haven't for the last 48 hours. I mean, we've just been I say 40, I should say 28 hours or 24 hours, maybe 28. You can see we've just been basically consolidating, right? This is the last 24 hours. You can see I'm drawing a little box around here right now. So I have a feeling that over the course of the next, and I may be wrong. Obviously, if we have a really strong GDP number, we come in at like 2.4%. The dollar is going to rip. I mean, that would be my 2 cents. But let's just argument's sake, let's just say that we have a number that comes in around 2%, 2.1%, even 1.9%. The euro dollar is probably going to do this, this. And going into early next week, I'm really looking forward to initiating a short in the euro somewhere in this zone, right? So this zone, this would be my sell zone right around here. And let me get rid of all this little drawing stuff that I did on my chart because it's kind of messy. Yeah. Okay. So what I'm hoping for, and it'll suck, excuse my language here, but it's going to suck for volatility reasons if we get this, but those are my expectations, right? Those are my expectations. I'm not expecting a whole lot, and we're just going to kind of grind higher as we head into month end, and you see some dollar selling flows come in. Like I said, unless the GDP numbers come out staggeringly beating expectations, which I'll be here with you for. Steve's not here, Stelios is here, and Greg is going to be coming on. So I'll flash the GDP numbers and I'll switch it over to you guys. Because I'm not really aggressively trading right now. I've actually had a really good month, my best month of the year thus far. I know it's we're only in April, so I don't want to like completely derail my whole month. So I'm taking it kind of light for the next few days. But anyway, what I am thinking is the euro dollar is going to be moving its way back up towards this 111.70, 112 area. 111.70, 80, kind of up towards this area. I think that's where we're going. Like I said, it's the GDP numbers are going to, they could obviously influence and change my thinking in the next 15 minutes, but that's what I'm assuming. Let me point out a couple other charts really quick. Obviously the rest of my analysis is on ForexAnalytix. If you look at any of the basic technical analysis and look at end of day analysis or the entries for yesterday, that's going to be predominantly my stuff. That's where and also the candlestick analysis as well. That's what I do throughout the course of the week. But obviously there's way more than just my analysis. There's, Andre, who was on yesterday. We have Greg Horvat, who's going to be joining us today. And if you guys are unfamiliar with Elliott wave analysis, or it's, something that, and look, Greg is actually thinking the same thing as me. You can see it right here in his analysis. If you want to, know a little bit more about Elliott wave or harmonic type of analysis, make sure you look through our analysis there, because that's where you're going to find those guys. And then obviously in the chat rooms we have the rest of our team in there all the time, and Paulie does add to the basic technical analysis throughout the course of the week. Anyway, let me discuss like the Aussie. So the Aussie, we had a little bit of a false breakdown. You can see, oops, it's a little cockeyed here. We had a little false breakdown below the 70 cent level, which has led to a bounce, which we were expecting. I mean, if you read the analysis from yesterday, in the Aussie. That's, we were expecting a bounce higher. The Kiwis also had a nice little bounce and possibly false breakdown below this 66 cent level, and that's allowed for a little bit of a recovery. But what you'll notice is we're not seeing a huge recovery. We're not seeing a huge recovery in like the euro or the cable. It's been more of the commodity currencies. Even the Canadian, the dollar Canadian is holding its own really well, despite Polis's extremely hawkish comments yesterday. How the dollar Canadian hasn't broken down the other direction, I'm sure a lot of traders are wondering. So therefore, if you happen to be short the dollar Canadian, you have to be very respectful of this breakout point right here. Matter of fact, let me double check something. Just want to make sure there was no Canadian data happening today, and there is not. So the dollar Canadian's holding up pretty well. Weak GDP numbers might allow for that, might allow for it to break lower in the dollar Canadian if we get a GDP number that's weak. But, there's hasn't been a lot that stopped that particular pair, the last few days. It's just consolidating its breakout at this point. One of the currency pairs that I think I would be a little worried if I owned, okay, if I was long, would be the dollar yen. Okay, the dollar yen, this made that false breakout on Wednesday night ahead of the BOJ. Everybody was worried about Golden Week and getting charged multiples more than normal on their interest carry for holding the dollar yen short on the, because on Wednesday nights it's triple interest, because they're making up for all the days over the weekend, and then you had to pay more interest because of Golden Week next week. So I think that prompted a little bit of short covering in the dollar yen. But the problem is when you get a breakout like this, and I was talking to the guys in the office yesterday, or when this happened, and I'm like, yeah, I didn't fall for it. I didn't fall for this little dollar yen move. I'm like, if I was going to buy dollars, it was going to be against the euro, but not against the dollar yen. I'm still not sold on the idea that the dollar yen is going higher, and rightfully so. I didn't short it, but at least I stayed away from the long side. Now, the problem with the dollar yen is that you had that false breakout. You had enough stops get triggered for longs. People got stopped in to be long. You got a lot of traders that were short that got stopped out, that now, because we had that false breakout to the upside this week, that could lead us lower. And if we do have a weak GDP number, I think this is the currency pair to be looking at. If we have a weak, like well below consensus number, I think the dollar yen is the place to be. I don't have any position on the dollar yen. I'm just, pointing out what I'm seeing and how I feel about it, but that doesn't make me right either. I'm just pointing that out. And I think that that the dollar yen is going to probably struggle as we approach this 112 area. So I think whether it's where we're at currently or maybe even up towards 112, I think somewhere up here, it's going to be a better place to be on the short side of the dollar yen rather than the long side. So, if you're thinking about it, somewhere through here, somewhere in this vicinity is probably going to be a decent area to be on the short side. Like I said, I don't have a position, but I'm not opposed to taking a short either. And that's just kind of the way that I'm looking at it as of right now. Let's also reference the dollar index. The dollar index is in a breakout territory. So if you are bearish the dollar, like let's say you're shorting the dollar yen, for example, you have to be pretty respectful of the fact that the dollar index is in breakout territory. We're in breakout territory that looks like this, and it's hard to be short the dollar yen or any other dollar pair as the dollar index is breaking higher, because what could happen is you could see the euro, like let's say the euro trades down towards 111, which I think it's going to, or maybe even 110, which I think is a very viable option. You know, if the euro dollar goes down to 110, where does that put the dollar yen? Well, maybe the euro yen is falling as a result. The euro yen is falling as a result, but that could also mean that the dollar yen, instead of being at 111.80, you know, we trade back up towards 112.15, you know, before it rolls back over again. So that's the biggest concern if you're short the dollar in any way, shape, or form, is that if you look at the dollar index, it is in, like I said, it's in breakout territory and it looks bullish. Now, before the GDP numbers come out here in a few minutes, and we're gonna keep an eye on the dollar yen as we go into the GDP numbers. And like I said, I'm gonna sit around with you guys and watch the release with you and see what the numbers come out as. I wanted to bring in Stelios and see if he's here this morning.
Hello, good morning.
Good morning, Stelios. How are you?
I'm very well, thank you. It's a glorious day here today in Athens, nice and sunny. So
I was going to say, it looks like the weather's beautiful there based on what I saw. So what comments do you have ahead of today's GDP numbers? Any comments in general?
It's hard to take a view on this number. I think it's going to be around. Well, I agree with your estimate that the Bloomberg estimate is a bit on the high side, but I don't see, given the recent numbers, I don't see anything that's going to move it substantially away from the 2 to 2.2% range, which is consensus. So I think we're going to get some like 2.1 or something like that, and it's going to be a non-event. So yeah, in that aspect, I don't really have anything meaningful to say, I'm afraid. So.
Yeah, I'm looking forward to. And by the way, if any of you guys have some peso exposure, which you may, I mean, because the U.S. dollar, Mexican peso. I'll show you the chart here in a second. But we do have in a half an hour from now, we have trade balance out of Mexico, which could be a market mover. And let me show you why the peso, you might be paying attention to it. We got this big double, triple bottom that is developed down here. Now, the double bottom is almost really just kind of played out as a whole. Just this double bottom, rather. Okay, you can see it's almost played out completely, right? As we moved up to 920, and if you read the ForexAnalytix analysis a couple of days ago, dollar Mexican peso is trying to carve out the double bottom, blah blah blah. Strong close above 19 level gives the confidence that long-term double bottom may be setting up for the pair. Move to the 1920 level seems logical, and we did it. We went to 1919 and change, and then we slumped again. But the longer term double bottom really comes into play if you start seeing a outsized move above like this trend line, then you start seeing bigger double bottoms develop, which point up towards 20. Not something that we're dealing with today, but something that it's worth noting as we continue to develop these charts over the next week or two. So let me find, here's my Bloomberg. Okay, so the numbers are coming out in 45 seconds. So any other last comments? What would you like for your last meal, Stelios? Anything?
Well, actually,
what would you want as your last meal? A euro? Euro pita?
Yeah, souvlaki probably, yeah.
Yes, souvlaki. Yeah, me too.
Our friend Leopold says, hello, Stelios in Greece. My cousin and husband own a hotel on the beautiful island of Zakynthos. That's very nice. I love the island. So I hope the hotel does well. Ziggy says tabbouleh. That's not Greek.
There we
Ziggy.
go.
Okay, 2 seconds.
%3.2%. Wow. That
What
is a big
hell?
number. Big number.
Insane.
Big number. Wow. That is big. That was unexpected. And the market is is look at the dollar yen. It just ripped up to wow. Let me put
Are
this.
we sure this is not a typo? 2.2. I mean, there's
I
no
mean,
logic to that number. Absolutely no logic.
yeah, that is crazy town. Holy cow! Look at the euro.
What?
Well, we hit 111. I mean, we almost hit 111. Holy cow! That is a big number. That was a big number.
GDP price index 0.6 versus 1.3 expected. So that's quite a bit lower. Well, this is really weird. I don't get it.
I don't either. So, hey, I'm going to pass it over to you guys. I got to go deal with this now.
Okay.
Coach, I'm going to pass it over to you right now, and then you can pass it over to Grega. Sound
Or,
good?
or pass it to me. Pass it to me.
Sorry.
Well, actually, I can
I
take it.
passed it over. Sorry.
Okay, don't worry. I think I can take it from here. Change presenter.
Okay, can you do it still?
But I've got it.
I think you fade the yen on this still. Just you know, 111.80, 112 was a important pivot. That's what we rallied back to on this. So anyway, I like to fade news.
Yeah, interesting. Wow, that was a big print. Let's see if that's really not a typo. It doesn't look like it. Okay, Greg is about to join. I had one thing to say. Really, there's not, apart from this number, not much else was happening overnight. But we had it seems to be all about equities now. Nowadays, we have quite a few results coming in. And the interesting thing, I mean, I don't personally trade equities. I'm not an equity specialist, but I do dabble every now and then. The interesting thing, which caught my eye, is that you have all these tech companies like Twitter and Facebook and Amazon and okay,
Bang.
Amazon has been less tech. Yeah, I mean they've been doing really, really well. I mean they beat comfortably, but you have companies like Exxon and Daimler and you know the ones who actually produce stuff, and they had big misses. And that kind of reminds me of near the end
2000.
of the exactly. You know, you would
Yeah.
see these tech companies going to the moon and the real nitty-gritty companies struggling. I'm not saying we're going to see another 2001 drop-off, but just something to keep in the back of your minds, you know. So
Still, even tech is bifurcated because you're right about the FANG stocks, but the semiconductors are going to get hammered today. Intel was down about,
yes.
So SMH is the ETF on it. They look real vulnerable here. So not all of tech. So even it's just part of tech.
Oh,
And I don't
nice.
even know, is Facebook tech? I don't know.
Yeah. Hey, Greg, is that you?
Hey,
Yes.
buddy.
Hey, man.
Hey, Dennis, how are you? Blake
I'm
already
very
signed
good.
up? Yeah, okay.
Okay, let me pass you the screen if you're ready, and I am here. All right, I've just passed it to you.
Okay.
Gregor, you
How's the
may
weather
be
in,
surprised, but I'm having trouble talking today.
Really, why? What's up?
Dental.
Okay. Okay, so I will go through a lot of markets actually. What I will firstly look at is dollar yen, since you covered it. So dollar yen, I think it may move even higher, but because of this golden week for the next week, I think the Japanese yen pairs can be very volatile, so we have to be very careful here. But still, technically speaking, I think that we may see more upside because dollar yen made 5 waves of recovery from March lows here, and we are now pulling back in 3 waves, which I see it as an irregular formation. So ideally, we are in a wave 2 setback, already retraced almost 38.2% of this whole rise. So I'm expecting that market will either resume to the upside from here or maybe next week from a lower prices. But the idea, everything behind this call is for the 10-year US notes. Okay, so what I'm looking at here is that actually 10-year US notes completed this 5-wave move, and we are now in a 3-wave setback. I have been warning about this reversal a month back or so, and it looks like that this is the first leg of this 3-wave setback. So minimum, we should see 3 waves lower, and if that's the case, it means that 10-year US notes will come a little bit lower, probably back to the area of a former wave 4, which is normally the case. before this whole corrective setback can be completed. Also, on the other hand, we know that yields should move to the upside, and that's when I'm expecting even all indexes to reach all-time highs, and at the same time, of course, dollar yen could also find a support. So I'm looking for more gains on dollar yen and also other yen crosses. I'm looking here at Aussie yen could be a very nice pattern here. Let me look at the daily chart. Okay, so here we have on a daily chart, we have a 3 waves up for a new high, wave B, and now we can be on a wave C. So if that's a flat formation, okay, then we may see a retest of this very important swing lows from end of January, start of February, and March lows. Okay, this is a very, very strong level at 77.50. So once we complete this wave C, I really would be or should be aware of potential new strong move to the upside. Also, I think that Aussie in general could see some strength. If we take a look on Aussie dollar, okay, I also see a pullback, maybe even a right shoulder unfolding. This could be a left shoulder, head, and now right shoulder. Already at a very important round figure here around 70. So I'm expecting a bounce here as well. And looks like that wave C is still, however, incomplete here. As you know, even in a flat, wave C should be made by 5 subwaves. So this was wave 1, wave 2, nice extended wave 3, wave 4 pullback, and expecting a drop into wave 5. Okay, and this wave 4 is now testing some interesting resistance here, previous swing low. So maybe we get at this another final push to the downside, but then I really should be aware of our rise. So based on time perspective and with current developments I think that in May, Aussie could really be very strong if I consider what I see on Aussie and Aussie dollar. Of course, 10-year US notes, I think it may also move much lower in May. Okay, now if we also take a look on the S&P 500, since all of these markets are correlated, this is DAX, or firstly we can cover DAX. So DAX still ongoing very big bullish cycle from 2003 and expecting more weakness up into wave 5 here. So if this was a correction, which I believe it was because it was made by 3 waves, then this correction obviously should be fully retraced. So here on a daily chart, okay, let me zoom this in. Okay, that's the 3-wave setback that I'm talking about. Okay, so this was a low, and now we are turning to the upside very aggressively. So I think that more upside will occur here. Honestly, I was expecting and looking for some pullback on DAX. I really wanted to join this trend, but unfortunately, we didn't get any real pullback because I thought firstly that this will be end of a first 5-wave structure and we will see a pullback and then we rise. But this is 1-2-1-2 bullish, very aggressive bullish scenario as it seems right now. So it appears that DAX could really just move straight to the upside even from here. Okay, however, pullbacks on the way up will occur. Okay, so ideally my attention will be at the start of May, probably will be in a wave 4 here. So here's DAX closer look. I'm tracking 5-wave structure within wave 3. As you know, wave 3 is an impulse wave, should be made by 5 subwaves, and when that's the case, you expect a setback. So this was wave 1, 2, wave 3, wave 4, nice support at the previous swing high. Then you have now wave 5, which is also subdivided in 5 waves. This looks like a triangle, which is okay because I'm expecting a final push higher to complete this current wave 3 cycle. And we know that moves out of a triangles are final within these current trends. So I'm expecting after this final push higher, I will be expecting a wave 4 pullback, okay? And this wave 4 pullback will definitely be on my screen for potential longs. So at the moment, unless you are a very aggressive intraday trader, but at least for me, I think that this is just too high, okay? Also,
Greg,
here
it's
I have
interesting
some.
that the dollar is actually giving up its gains right now. I don't know if you're looking at it.
Yes.
I don't see anything that's on the back of what it is, but it's just quite interesting. But anyway, carry on.
Yeah, I will go. I will also look at the euro dollar. So maybe we had some technical reactions there. Okay, so UK index also very bullish pattern that I see with 1, 2, 3, 4, 5, and this was a flat formation. So expecting more upside. Also, this structure looks like an impulse, and I believe that we have a lot of indexes all over the world actually that suggest the same thing, more gains. If we take a look on the S&P 500, still we are here moving to the upside to wave 5, all-time highs. I believe still we're not being taken out. We're just consolidating. So maybe this will occur when actually 10-year US notes will resume its downtrend. Actually, I'm not sure if I showed you this, but here on the intraday chart on the 10-year US notes, we have a 3 waves up. Okay, so maybe this reversal is around the corner. Okay, also the S&P 500, where's the intraday chart? Here it looks, if you take a look closely at this structure, okay, very slow, choppy, overlapping, no way to count this as a bearish impulse. So if that's the case, you know it's a correction. If it's correction, then you know it should continue in the direction of a larger trend, and this means to the upside. So I'm expecting another push up. There's a 261.8% extensions, fib extensions that comes in around 2960, and that would be around all-time highs. So after that, maybe we will see some interesting pullback. Okay, so since I mentioned that we will cover euro dollar, let's take a look. Euro dollar is definitely at some very important technical levels, so I'm not surprised about this, what is going on the intraday chart. Notice, and I have been highlighting this level with Dale here in the webinar 2 weeks back as well. So we've been looking for this ending diagonal for a while. I've been looking for a final push to the downside, and we are now testing this very nice level right there, which comes in around this potential trend line support of this ending diagonal, as well as horizontal support. And also we are already, the 4-hour chart, we are already moving out of a wave C. However, this wave C may not be finished yet. There's room for slightly more weakness. If we look at the here at this intraday chart, despite this despite that spike that just occurred, I think that we should still be aware of this upper resistance level at 1160. It was the former wave 4. So either we are now in this still wave 4 of the same degree, or already we are in wave 4 of a higher degree. Okay, so I would be aware of potential new reversal lower. Maybe not today, but maybe we'll just see a price action that will slow down into the end of the week, and maybe we see more weakness coming through next week. Also, dollar index, I mean, the overall picture for dollar index is obviously bullish. Based on a weekly chart, I'm expecting more upside, but notice that we are moving out of a triangle. Okay, so it means that moves out of the triangles are finally within a higher degree trends. So it looks like that we are in a 5th wave. So I would not be looking for any aggressive move here on the US dollar. I would be aware of potential, maybe limited upside around 99, around there. It's still obviously based on the intraday or short-term perspective, that still could provide some nice opportunities to the upside. Because as I said, it can be in a wave 4. But generally speaking, we see dollar index making a 5-wave movement, now approaching to wave 5 targets. So sooner or later, ideally, we will see during summer, when markets may slow down, we will see a pullback into a new corrective phase. Okay, so I will not call this any aggressive bullish breakout. I would be very, very careful with that. Okay, so ideally, first 3-wave setback may unfold during the summer, and then we see a new phase begin after September. Okay. Now, what is also very interesting, maybe crude oil. Okay, now crude oil, I've been looking for push towards this swing resistance 61. It was around 63.70. This was also 61.8%. We spiked above it, and now we are turning down. And notice that we are turning down quite aggressively. Okay, so the question is if this is a very important top in place, or it's just a pullback with an uptrend. That's a very, very hard call. And definitely I would be careful with any aggressive bearish calls. But what is probably the most important, or will be the most important for me for the next week, is how this current decline will unfold. As you can see, I'm trying to count it as a 5-wave move in progress. Okay, that's a key level. It's still in progress. It's not been made by 5 waves. So if I level this, probably this was wave 1, 2, 3, 4, wave 5. Okay, and to complete wave 3. So if I get wave 4 bounce, okay, and then a new leg down, this would then make a whole decline from high in 5 waves. And then this would be a very strong indication that top has been made and that we are going to see much more weakness. So after that 5 waves, watch out for a pullback, and then that would be probably my game plan to look for shorts. Okay.
You know, Grega, oil is one of those instruments that's very headline dangerous, let's say, because supply is controlled in the way it is, and one tweet by Trump or one announcement by Saudis can really move it a lot. So it's very difficult to time it. It's
yes, but what I like about oil that when it begins a new cycle, this cycle is very stable.
Yes. Yes,
it's
right.
The moves are there very directional. For example, if we take a look at the daily chart, okay, here in 2000 from 2017, very nice strong move to the upside. There was after that very nice clear directional move lower. This was a very nice clear directional move higher. So when new cycle will begin, if we will be able to call this as a start of a new cycle, then again it can be very nice clear directional move. And that's what I like about the oil, that once a new cycle occurs, it's very clearly directional. It's not something very choppy sideways. So that's why I think that this, despite fundamental stuff and has highlights, I mean, it can be still very good pattern if we see a 5-wave fall, as I said. What's the fundamental story in your eyes, Stelios? I mean, are you more bullish on crude oil or bearish?
Well, I've shown my weekly chart on oil. I actually, there's two things with oil. One is whenever it goes towards $40, then you obviously get production decreasing because of shale oil producers being unprofitable. And then as soon as it gets to near $70-$75, production comes up, and producers also hedge their they use forwards to hedge their production, etc. So we're trapped between, I know it's a very big range, but between $40 and $75. I have no real conviction either way, because I think it's just going to keep going from one end to the other, and it has been doing this for the last 5 years.
So sorry? Technically, you see some very big range bond market actually.
Unfortunately, yes, because that's the way it works, right? That's the way supply works on this. Obviously, a big downturn in economic environment, global economic environment, where demand drops will be bad. But in terms of the supply, you have this huge channel which has been going on for. Hold on, let me have a look at my chart. It's been going on for 5 years now, between 75 and 40, and it just keeps going up. Okay, there was a drop in 2016, which was it was quite severe, but it came straight back up, and then it's been within that channel. So I think, personally think that this big channel will continue until there is something. I mean, I don't know what that could be, but until then, I'm personally looking to sell any big rallies towards $75, and I'm looking to buy, and I have a preference to be long oil, but so I'm looking to buy anywhere near 45, let's say. I know it's a big channel. It's a very big channel, so.
Yes, what I like about this is that actually, even if we are sideways in very big range, as you said, we are approaching towards this upper side of this range. So if this new cycle is really going to be around the corner, I think it may not be far away actually, even based on price. We are at 61.8%, as you know. That's a very key level here for FIB. I mean, even heating oil is also around that level, right? So I'm thinking that actually, if we get this 5-wave fall, that we really could start building some weakness already from here, not necessarily from higher prices. What I really would like to highlight is that, as we know, crude oil and the S&P 500 in general, since start of January, they are very bullish. They are moving quite well together, and the S&P 500 is trading at the all-time highs. I'm thinking that we will see a spike there to new all-time highs and no real continuation through, because market was so extended from January, no real pullback on the S&P 500. So I'm thinking that this pullback will occur from a new highs where flows will change because of probably a lot of different orders at new all-time highs. So I'm thinking about the pullback on the S&P 500 from a new all-time high, and that's when crude oil will also possibly turn lower. And maybe that's now what we see on the crude oil already now, especially if we get these 5 ways down, could be an early evidence what is going to do with the S&P 500 at the all-time highs.
Yes, that makes a lot of sense, Gregor. Yeah, absolutely.
So, I mean, it's definitely, I'm not expecting some very strong extensions on the S&P 500 once we reach new all-time highs. Of course, there can be some aggressive buying at the start, but I really think that this move is so executed that it may slow down very soon. Okay, so what's another thing? I mean, cable.
We haven't talked about the pound for a while, right? What do you think about cable?
Yeah, I mean, it was very tricky for the last few weeks, and I still think it is, but the whole picture is not changing for me. I mean, I have been talking about this flat formation for a while. I thought that firstly that we'll see another push to the upside and then a reversal lower, but looks like that we are going lower already now. So I'm just watching few important levels here. I mean, it's still this decline. Okay, I know that you are not Elliott wave technician, but still, I mean, if we are going to see this move to the downside, starting to picking up in momentum, which means it will cause a very sharp drop, then it could be an evidence that we are already stepping into an impulsive decline as a subwave into a subwave 3 of a much aggressive higher degree bearish trend. However, for this to make sure that we are on this kind of a track, then definitely this bearish level from February lows actually should be taken out. If on the other hand we will break this trend line, then I think that just this very nasty overlapping price action will just continue. So in such case, I will just ignore it. But so far, I'm just tracking it from a distance. If we're starting to see a decline, then maybe wave 4 pullbacks could be very interesting for shorts. So 12770 definitely key level for me. Okay.
Gregor, we have a few people asking about gold. If you would like to have a look at that, if there's anything interesting.
Sure. Actually, look at the silver. Okay. Now, and then I'll look at the gold. So silver has been moving to the downside, but not so aggressively like gold. Okay. So based on this silver structure, where I see a wedge pattern or ending diagonal, if you want, I'm expecting actually a new higher degree free wave rise. And this free wave rise may represent wave E. So it's not a bullish call, it's a temporary, I would say, like a slowdown before the next leg to the downside. Because what I'm seeing here on a daily chart, okay, is actually a very big triangle. Okay, don't get confused by this, but what is the most important is that I think that we have been looking for this 3 waves down for a wave B, D, and now we may see another leg to the upside, another 3 wave structure, which will be wave E. So I think that current rise, especially this ending diagonal, could tell us that we are really headed to the upside for wave E. So for the next maybe week, maybe two, especially on silver, because silver can do much better than gold, I think that we may see sideways price action or even higher prices towards 1550, 1560 in 3 waves. Okay, so the ideal structure would be something like this. Okay, and once we approach these levels here, that's when I would be very careful about potential more upside, since I think that market could actually complete this very big triangle. And if we take a look at gold, here's gold. I know that this is not very clear structure. It was much clearer when market has been trading here, because we had 5 waves fall and very overlapping recovery. So we knew that no matter what our long-term picture, the next leg should be to the downside. Okay, and so far, notice that this decline from here to new swing low has unfolded only in 3 waves. So either that's going to be a very aggressive start of a very aggressive bearish trend, like a 1-2-1-2 scenarios, or are we going to see some sideways price action, then a drop after retest of these March highs? Okay, if this would be like a maybe not wave 3, but if this would be like a wave B of a flat formation. But the idea is that I think that gold will resume its weakness. The only question is if either after this subwave 2 or after higher prices, if we get a straight move to the upside. So regarding gold and silver, I really think they are not so tradable at this stage. As I said, they were much more clearer month back. So now it's just very important to be patient and wait on the price structure to unfold, and then we see what we got actually. But here's, maybe this is interesting for you. Still, yes. Here I have gold compared to the S&P 500. Okay. So gold compared to the S&P 500 is showing weakness after this 3-way price. So it means that market should continue to the downside here. So in other words, S&P should be better than investment than gold. Okay.
The S&P does better than anything, right?
So I'm expecting maybe this way forward that I'm expecting could maybe unfold once the S&P 500 reaches all-time highs and then progresses even higher, okay? So, and here we have also crude oil, okay, which is also in a bearish trend, very aggressively moved to the downside. Looks like it's making a new impulse. So after wave 4, expect more weakness, which means that gold again should be doing much worse compared to the crude oil. But then we have gold versus euro. Okay, here this short-term structure is the most important. What we see here is that gold, which is very bearish against the S&P 500 and crude oil, okay, is showing much better structure versus euro. Okay, so it means that no matter how we look at it, the worst position that we see has the euro, because gold versus euro is pointing to the upside, probably to retest these 2016 highs. Okay, so I would not be surprised if euro dollar, this is obviously the longer term call, if euro dollar will just continue its weakness into this wave 5 later this year.
Very interesting. So towards parity, wow.
Yes, I'm expecting a retest of this 2017 levels.
Cool. Okay.
Euro, after all, maybe this whole situation will resume when we will have again more details about the Brexit, which sooner or later should be resolved. So no one knows how this will actually impact the Europe in general.
I wouldn't bet on that. You know, this might take decades, but yeah. Okay.
Yes. Okay. It might have very bad negative implication for euro before it will resolve anyhow.
Yes. I agree. Okay, Dale, are you there? Do we have a guest today? I think we do have a guest today.
Yeah, but I postponed it still because I'm having a hard time talking.
Okay.
In
That's
fact,
absolutely fine.
I need you to do our tagline to say goodbye to everybody.
And
Do you
maybe,
remember it?
Okay,
maybe
actually, I want to cover real quick on Bitcoin.
Okay, go ahead, Greg.
Yeah. We got it,
Dale.
Dale. Don't worry. We got it.
All right, buddy.
Take care, Dale. All right.
Thank you.
Okay, so here's Bitcoin. Let me look. Okay, so here at the bottom we have a Bitcoin price. Okay, and here at the top we have Bitcoin shorts versus Bitcoin longs. Okay, and what we see here, actually, let me try to find this on the trading view here, because it will be much easier. Just a second. Okay. Okay, so we have Bitcoin longs ratio versus Bitcoin shorts. And what is probably the most interesting thing here is that we are seeing Bitcoin shorts at extreme levels here, despite prices of Bitcoin doing quite well at the highs. And if we take a look back, okay, and maybe trying to make this, okay, this will not work. Okay, I will have to do it here. And if we look at this range, what actually Bitcoin done when this ratio was at the lows, the Bitcoin price recovered. Okay, so because shorts were at so extreme levels that obviously knew something that is very crowded, obviously something else will happen. And what is interesting that there are on Bitcoin a lot of shorts at the moment. If you look at this model, we are probably at this cycle, at the end of this current cycle. So it means that new buyers may come in, which means that Bitcoin price can see even more upside if we consider that Bitcoin price is already doing now, despite a lot of investors trying to influence the price by selling it. So in my opinion, if we look back, you can see that here Bitcoin shorts were at extreme levels, Bitcoin has seen a recovery. Here we're at the extreme highs, the Bitcoin longs market has seen a pullback to the downside. So over and over again, we have seen this model that worked out very good for the last year. So I would not be surprised, since we are now approaching the lower side of this ratio, I would not be surprised that buyers will come in and try to send these prices even higher on Bitcoin. And I'm looking towards 6,000, 7,000 after a pullback. Okay, so that's what I wanted to say just for Bitcoin. Stelios.
Thank you, Greg. Thank you very much again. It's always a pleasure to have you on here. And I know very little about Elliott Waves. I try to learn every time you're on. So thank you again. And thanks everybody for being here. And I will close with the usual, what Dale says, don't just count your pips, count your blessings, and have a great weekend, everybody. And see you on Monday. Thanks, Gregor.
Bye. Bye, everyone.
Great job, guys.
Thanks, Dale.
Bye, Dale.
All right, see you guys.
Yes,
Adios.
Bye-bye.
I will, buddy.